Welcome back. It's John Micklethwait, the editor-in-chief at Bloomberg. You've just heard from Justin Trudeau. Now we have Mark Carney. Trudeau, then Carney. It's an intriguing ring to many Canadians. But we are here to discuss the environment and COP26. COP26 being organised in Glasgow by Britain and by Italy, and with Mark Carney as the main advisor to Boris Johnson. Mark, and I could begin with a sort of general question about COP26. John Kerry has described it as the world's last chance, and you've seen the numbers, especially from BNEF, that show that the level of commitments is still too low. What do you think is a realistic expectation from Glasgow?
Well, first, thanks for having me, and may I compliment also actually that BNEF research because it's timely and it's I would broadly agree with it. Look, the objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach, so that countries are showing up not just with objectives, but with the underlying plans that are consistent with that, and that we organize the private sector consistent, again, with that core goal. It was a good week last week. With the Biden summit, the commitments of the US, Canada, UK, Japan accelerating, a number of points also made from some of the major emerging economies. So there are some advanced economies that are now have commitments and the policies coming in consistent with that sub 2 degree objective. But of course, the whole world has to get there, and we need to use every day, every week and month between now and Glasgow in order to get everyone aligned for that goal. So there's more, good week last week, more work to be done.
It's a particular focus there on the Asian countries. So the hope is that they will come in with much more precise commitments before Glasgow starts.
I think so, although Japan moving their so-called NDC to 46%, up from 26% carbon reduction by 2030, with a stretch goal of 50%. That is a major, major move. In China, it was interesting what President Xi said at the Biden summit in terms of coal in the beginning, the first formal signs of phasing out coal latter half of this decade, the start of that process. Obviously, it's essential that moves. And as the Secretary General said, advanced economies need to be out of coal by the end of this decade, and emerging economies out by the end of next decade. So there does need to be movement there. South Korea ending public financing of coal as well, important. But we need more. You're absolutely right. We will need more out of Asia. I would underscore, though, again, some of the positive signs. Again, Prime Minister Modi emphasizing the 450 gigawatts of renewable power that they intend to build. And that's tangible. That's real. The economics there work, and I think the commitment is there. So there's positives to build on, much more that needs to be done.
You mentioned Biden's commitment to bring it down by 50%, 52% by the end of the decade, America's contribution towards global warming. Is that credible? Do you think America can really do that?
I think it is, first off, it's incredibly welcome. It's welcome to have the U.S. back. As I think presidential envoy, I get the title right, Kerry said, you reestablish credibility not just by words, but by actions. You reestablish by action. So it'll be the actions behind that. We're seeing elements of that in the first presidential orders. The Biden infrastructure plan is consistent with that on grid infrastructure, on moves on electric vehicles. Again, we'll need to see more. I think if you look at the policies, it's not all the way there, although that is true for virtually every country, and certainly true for those countries who have upped their objectives. So policy needs to fill in. Ultimately, and I think I'll just underscore this, it's the private sector that is going to supply the trillions of investment that's needed for anybody to achieve their objectives, which is why the work on private finance is essential for this COP and beyond.
I'll just come back to private finance in a second, but a particular issue, you are Boris Johnson's advisor. The issue with Boris Johnson is he's normally much better at making promises than necessarily completing them. In Britain, he's talked about an enormous 70% drop in carbon. Are you sort of satisfied with the numbers behind that?
Well, I think what's encouraging in the track record in the UK government is it's taking advice. And the UK has put in place a structure where there is an independent assessment of how good the policies are. In other words, relative to the objectives, which is 68% down by 2030. And as you just noted, that 78% commitment that the Prime Minister made last week by 2035. Now, that commitment was a response to the direct advice from the Carbon Commission in the UK. So they're following the advice. They've largely followed the advice on policy. There is still a gap, to be clear. There's more policy that needs to come above and beyond the 10-point plan, but they're heading in the direction. I'll point to one aspect of that, which is around the coverage of carbon pricing, for example, in the UK. It's also an issue in the European Union. Ultimately, carbon pricing covering transport and elements of heavier industry in a way that's going to be consistent with these new objectives. But there's still time to put those policies in place.
You mentioned the private sector a few times. Last week, you launched GFANZ, which is the Glasgow Financial Alliance for Net Zero, which you set up, and it brings together various financial initiatives to do with global warming. And the particular idea is to bring in banks, insurers, all those things. I should declare that it's supported both by Mike Bloomberg and also your own employer, Brookfield. But I suppose the big question is, what do you hope to achieve by that? Lots of Greens are looking at it and saying, well, this isn't powerful enough. People declaring that they'll get there by 2050 isn't quite good enough. They want people to give up coal now. What would you say to people who feel that way?
Well, first, this all starts with commitment, but very hard after that is transparency. And so welcome the scrutiny that comes from all stakeholders on these types of commitments. But this is the mainstreaming of climate finance that the world needs. The commitments, of course, they're commitments for net zero by 2050, just as there are country commitments, 126 countries and counting now with 2050 net zero commitments. But there's also commitments for fair share of decarbonization by 2030. So those are for the banks and the insurers and others, analogous to what we've just been talking about for the US, the UK, Japan, etc. And that's, by the way, the world needs to be down by about 50% in terms of decarbonization by 2030. So this is significant when you're a bank or an asset manager and it's your portfolio, it's not your operations. I mean, of course, you have to move your operations to net zero, but this is about where you're investing and to whom you're lending, and that those entities are decarbonizing at that rate. And what, for example, the banks are required under this is to publish within 18 months their decarbonization plans for the most affected sectors, and within 36 months by all the sectors, what their decarbonization plans are. So we'll get a very quick look at this. There's annual disclosure requirements and absolute and emissions intensity reductions, and then 5-year decarbonization plans across the whole portfolios. All of that comes out and can be scrutinized. And these entities are committed to the objective. I'll make one other point. There are lots of sustainability initiatives. There's lots of individual institutional announcements across the whole financial sector. This is the one group that is tied into the UN COP process. So it's part of something called Race to Zero. This is the gold standard for net zero commitments. The secretariat is the UN UNEP FI. So again, it's tied into the UN. It's got these transparency. It's got short-term requirements. This is, people have to deliver on it, just like you were challenging me on countries. But this is the architecture. And so the reason we're talking about it is it's $70 trillion of assets that are part of the Glasgow Financial Alliance for Net Zero. And we intend to grow that between now and Glasgow. These are the founders. This is the core. It's a pretty big core. It's an impressive core, but we need even more than this.
What happens if say, a bank doesn't meet its targets? Will you throw them out? Is that part of the process?
Well, I think if it is consistently that's the case, if they're building that track record, then no, they're not delivering their fair share, and they're not part of these alliances, and they would have that sanction. And again, banks, the information is going to be out there. What are the strategies for these individual banks, insurers, pension funds, others for decarbonization? How successful are they in doing it? And we should take a step back as well, because all of this links into what the countries are doing, the policies that are there, and the financing being in place. Now, one of the messages that we're trying to give to countries, not just the G7 and G20, but all countries, is the private financing is being lined up for ambition. So be ambitious, put the policies in place, and you can draw down that. And that's how we get the virtuous cycle that we need to address this enormous challenge.
There's another side to that, which you came very close to saying, is that the companies are coming forward with these promises. Some people say the multilateral financing organizations have been slower. Is that something that you want to change?
It is something we want to change. As part of the Paris Agreement, 2.13c, I believe is the article, all financial institutions are supposed to be aligned with the Paris Agreement. In other words, their balance sheets, their strategies are consistent with a path to sub 2 degrees, that 1.5 degree target. It is not the case for most multilateral development banks, international financial institutions. That needs to change. The private sector is becoming oriented to net zero. The public sector or these international financial institutions should be leading the way. There's promising developments, but over the balance of this year, working with the Italian presidency of the G20, the UK, and Italy as co-chairs, we need to get the multilateral development banks in this place. And let me make one other crucial point here, which is it's not just aligning those balance sheets, but it's how they're used, because in the end, we're talking tens of trillions of balance sheets, tens of billions of balance sheets of these MDBs like the World Bank and others, but they can leverage trillions of private sector flows. And as you get the private sector now oriented to net zero, more effective use of those public sector balance sheets, particularly to get the flows to emerging and developing economies for the type of mitigation, carbon reduction that we need to get to net zero, will be critical. Again, it all loops back to where we started, which is this is part of what unlocks ambition, greater ambition from all countries in the run-up to Glasgow.
And you've been on, I'm just thinking whilst you were talking, you've been on both sides of this particular divide. You've been in the public sector and Governor of Bank of England, but you've also been in the private sector at Goldman Sachs, now at Brookfield. Where do you feel the main impetus is coming from? It feels like recently, over the past year, the private sector has really given a kick to these things. You've got a lot of big financial institutions coming out, committing themselves to goals, and we'll come back about the value of carbon offsets in a moment, but they are committing themselves to these things. Is there an element that the private sector has now moved a bit ahead of the public sector?
Yeah, I think it has. I think, well, first is that people moved ahead of governments. So we had a huge shift in public opinion in recent years, the mainstreaming of really the imperative of addressing this issue, manifest, with Fridays for Future for young people, all the way through voting patterns in a number of countries. People say, deal with this issue. So people moving in advance of governments. I think governments are working to catch up. I think associated with that, the private sector is more advanced at the moment than public ambition. That's a good thing because it can help unlock that public ambition. Now, what's crucial in terms of keeping this momentum going is having the type of transparency. It's one thing to have an objective. Secondly, you got to say how you're going to get to the objective, and you have to reveal in the short term, whether you're a bank or an investor or others, whether or not you're hitting your targets, and then people will judge, and people will be judging financial institutions. And I think one of the most important things in the last 12 months, point we've been making as part of COP to major pools of capital is, listen, part of your job is to judge which companies are going to decarbonize and whether to back those companies with investments or loans. But you too will be judged, and you need to get your own house in order. And your judgment, the judgment is not going to be about some ESG score or some sustainability mission statement. It is, are you decarbonizing? are you part of the solution or are you part of the problem? And that's what shifted, and that's what the Glasgow Financial Alliance is codifying, is making hard and real. And Bloomberg and others, you'll be reporting on it and parsing the numbers for institutions themselves, and then for the sector in aggregate, and stakeholders in all senses, not just investors but citizens, will be judging whether enough is being done.
You just talked then about the need to have very precise targets, and then the issue about how you get there. Just firstly on those precise targets, net zero, what is your definition of that? Because there are various interpretations.
Well, the first is that, I mean, net zero is the imperative of climate physics. We're not going to stabilize the temperature at any level, 1.5 to 2.5 degrees, unless we get to net zero, which means that any carbon that is emitted, and sometimes people talk in terms of anthropogenic, human emitted carbon, but it's all carbon, what comes from natural sources as well, has to be removed. And those are flows. So any residual emissions, we need to get to net zero. The objective is to get to net zero by 2050. Now, very importantly, what matters is what happens on the trajectory between now and then, because as you well know, it's the stock of carbon or broader greenhouse gases in the atmosphere which determines climate. So as the first and primary responsibility of a company, a financial institution, is to reduce their absolute emissions. And the issue is that alongside those absolute emission reductions, they can complement those with the use of offsets. Now, there are different types of offsets. First and foremost is those offsets which pull carbon, remove carbon, I should say, from the atmosphere. So think a growing forest as an example, or if and when carbon capture and sequestration becomes available at scale. Those are the two examples of actually removing and permanently removing carbon. There are also offsets that are related to what's called avoidance. So think the avoidance of burning down more of the Amazon rainforest. We can all agree that that's a problem. You're avoiding a problem. The question is the standards and the integrity around that. So I think on net zero, we have to distinguish between the endpoint and what happens on the trajectory, and do we have adequate incentives for all types of offsets in those markets to develop? Because properly, with proper integrity, they are not equally, they are all important.
I know you have pushed and said that people should focus first on removing carbon themselves, and then sort of using offsets as a kind of top up. But there is this problem with offsets. Various people have been pointed, they've been kind of granted a bit like papal indulgences in the Middle Ages. You look at all the carbon offsets around the world, you end up with virtually the whole Earth covered in forest, which isn't going to happen. And how do you get that sort of element of reality in that, and particularly this idea of carbon trading?
Yeah, okay. Well, first thing is that reinforce it's absolutely the responsibility to reduce absolute emissions as rapidly as possible and as much as the science allows. But there are certain industries where there are limits to the current technologies and engineering, and so there is value in removing carbon during that period of time. What that does is it buys us more time to make the progress, make the investment, make the innovations, breakthrough technologies and others that are going to be needed to ultimately get us to net zero. The second thing is that, and this is a live issue of discussion, so for companies that are on trajectories, so-called science-based trajectories of reducing, sorry, this is my graphic, reducing emissions towards net zero, should they be compensating for the emissions that they're actually emitting while they're on that path, because they're still emitting, and so I view that as a responsibility, a potential responsibility above and beyond getting on the trajectory to net zero. And this is the one thing we know is that what we don't have today is a robust, high integrity global market for offsets. We need that market. It's being built under the Bill Winters working group. It's a private sector working group. There's almost 200 different entities, including a large number of NGOs involved in the development of that. And by this midsummer, The core elements of the governance, the structure, and other key building blocks of that will be released. We already have the blueprint out. And in parallel to that, these judgments about, and I'll stop here, where these offsets should be used and how we can use them to maximize our prospects of getting to net zero, and in the process, getting big flows of capital to emerging and developing economies and protecting biodiversity.
Do you think that market should be regulated? And also, I suppose, where do you think it's going to be centered? Some people talk about London, yes. Others talk about Singapore and places.
So a couple of things, very important. Yes, it should be regulated and regulated in a couple of regards. First, the core integrity of the market, like any market, the plumbing of it, if you will, needs to be regulated, needs to be high standards. Very importantly, we need a governance structure that everyone recognizes that says this is a high integrity offset, first and foremost. So in other words, it actually is doing what it says in terms of removing carbon, for example. And we think, my view, and I think this is part of the process of the independent group, is that there should be a gating factor for those who are buying offsets. So in other words, you can't buy offsets as a company unless you are reducing your absolute emissions, unless you have a high quality net zero plan. So that helps take care of the papal indulgence problem, the example you gave. Now, where is this going to be centered? I think the two, London and Singapore are two great, financial centers, have infrastructure and the depth there to develop it. You could see potential a few hubs for it. There, and last point on it is, I would distinguish the architecture here is with exchange traded contracts. But effectively, the bulk of this is an over-the-counter market that references those core exchange-traded contracts.
One last question, which actually just come in from the audience. It says, do central banks have an obligation to intervene when governments fail, when they take harmful short-term political measures that do in climate change? I mean, you spoke a lot about climate change when you were the governor of Bank of England. Do you think that's a legitimate thing for central banks to come in on?
Central banks who oversee financial institutions absolutely have an obligation. This is now a mainstream view. It was on the fringes when I first mentioned it, to make sure that those financial institutions are robust to governments doing what they need to do to get us to net zero. Yes.
One very, very last one, because I mentioned Trudeau at the beginning. You've aligned yourself a little bit with his administration, his government. Will you undertake to hold him to the fire if he doesn't fulfill the mandate?
Well,
fulfill his promises on it.
Yeah, absolutely. I mean, yes, working together, we try to put it in more positive terms, but the issue is getting the gap between those commitments and the underlying policies closed. And what Canada has done is we had a 30% target. We had policies that were delivering that and delivering more than that, actually 36%. We've just increased our target. That means more policies consistent with that. We have more work to do in aligning our financial institutions with net zero as well, and we'll do that work so we can deliver this and deliver more and play absolutely our role in solving this issue, and in the process, and I firmly believe this, creating the kind of jobs and growth that Canada needs and the world needs.